Welcome to the Idaho Business Podcast, where we talk with local entrepreneurs, share motivation, network with one another, and pick up a tip or two on how not to burn your business to the ground. I'm your host, Spencer Ward. Welcome back to another episode. I am here again with Brett Bawden. I've been asking for a long time for a lender to be brave enough to come on and talk, not rates with me, guys. I'm not trying to hold people down to that kind of stuff, but Brett heard the call to action. He's like, you know what? Let's do it. Let's talk. People need to know this kind of stuff. So, Brett, thanks for coming on the show today.
Absolutely. It's a pleasure to be here.
Cool. Brett has been in the financial world for a long time. He knows, lending and SBA lending inside and out. He's currently with Truliant Credit Union, and he has the ability to loan nationwide for SBA deals on business acquisitions, and I'm sure other things that he'll probably get into. So,
Yep.
Again, welcome, and we're excited to have you. Before we get into any more substance, I have to call out our sponsors, Health West, great organization, great medical groups. Give them a holler, find them where they're closest to you, and give them a try. Bring your family there, see what they can do for you. And my company, New Clean Commercial Cleaning. If you need any janitorial services from Twin Falls to Rexford and anything in between, we can get things handled for you. All right, Brett. Again, welcome. We've said it about 3 times now, but welcome. You're always welcome on the show. Before we've talked about business acquisitions and stuff like that on a business broker side, but this is something that I really want to talk about. Is people don't realize what funding is available to them, just as any John Smith down the road or Becky or any Nancy down there. People have available funding through the SBA. So for business acquisitions, can you fill us in a little bit on that?
Yeah, absolutely. So one of the key aspects of SBA lending is to promote what's called ETA, right? Entrepreneurship Through Acquisition. And it's kind of a new term that is being used in the industry over the last few years. So if you hear ETA, as far as lending is concerned or acquisition is concerned, that's what it means. And it is about promoting that entrepreneurship. Instead of starting your own business from scratch, it's about, how do I become an entrepreneur through acquisition and be able to acquire a business that is within my expertise or within my lane that I can then take and maybe grow, right? And grow it into something bigger. So, the SBA is a great way to fund something like that. And one of the reasons why it really works for an entrepreneur is because a lot of entrepreneurs out there don't necessarily have a lot of money set aside to either buy a business outright or to do something more along a conventional loan. So with the SBA, it provides lenders like myself a guarantee on the loan. So what that means is if it, nobody wants a loan to go bad, right? But if a loan does go bad and the business fails, the lender can be assured that the government will back that loan up to 75% of the losses. So it helps with lenders getting comfortable with doing what is considered a little bit of a riskier loan. One of the key things we look at when we're looking at a business that's being acquired is the health of that business and looking at the financials and making sure that the cash flow is there to support the new debt. And so we want to make sure that, that business is healthy when that new business owner comes in there. But even then, you may think, well, the business is operating, it's doing well, it can support the debt payment, but we as lenders still consider it in a way as a startup. And the reason why we consider it that way is because it may be proven historically, but it's not proven with that new owner.
Mm-hmm.
So that's another reason why we kind of look at it as a startup, even though it's not really. And so, so the SBA allows for this guarantee to be in place, and it opens up the door for us to do these type of loans.
I love it. Now, a couple questions I know we're gonna get on this is, what's the max amount that I have or anyone has uh,
Mhm.
of SBA loan availability?
Yeah, it's a good question. So the SBA allows up to $5 million in SBA loan. And it doesn't have to be one loan either. So it's a accrued amount. So you could have multiple loans, just as long as they don't go over $5 million in aggregate, then you can go up to that amount.
Okay. Is the current administration, I've heard mumblings about this, but is the current administration looking to expand that 5 million to a little bit bigger number, or no?
We hope so.
We
We
hope
think
so.
it's time. We think it's time for that to happen.
Good.
They have done a little bit of that. Where we've seen it happen is in the manufacturing
Yeah,
sector. So they
I
have
saw that.
expanded it up to $10 million of guaranteed funds, which is fantastic.
It's awesome.
And there's something that just barely recently came out for for ag related businesses. So even grocery stores, transportation companies that are related to farming, things like that. The government has just announced that they are increasing the guarantee from 75% to 90%.
Wow.
So that also is kind of firming up that market to try to help support the ag industry in the U.S.
Oh yeah, that's huge, especially in Idaho, where a lot of our
Yeah,
GDP, I'm sure, is agricultural based. So,
yeah, absolutely.
but also technology based. So that's
Mhm.
great. So when we talk about you got to buy the business you're buying has to be able to cover the debt that you're paying, to the seller, to the SBA. Um, it can't just be, because I'm sure there's a lot of people out there thinking, oh yeah, if I just buy something and it's covering it, I'm good. Well, you got to think about, you got to make a little bit of money off of yourself, and there's got to be a cover ratio to this. Like you, it'd be great if you could have that cover ratio of two times the amount of debt coverage. Uh, but preferably, I'm sure you guys are probably at least what 1.5 of cover ratio or more for getting a loan done.
The SBA has a bottom, and that
Okay,
bottom is 1.15.
okay, that's
But
that's low.
yeah, it's low. But most lenders are 1.25 and better, and that's where
Okay,
we're at. Is we're at
okay,
1.25. But we do take in consideration of your lifestyle, right? And so if you're going in as an owner operator in a new business, we're going to make sure that we're considering your salary and those things that are necessary to support your lifestyle, that those are all being calculated within that debt service coverage. So
mhm,
we don't want to put anybody in a bad situation where those margins are so tight that they're not able to pay themselves or not be able to support their lifestyle. So we do look at that very carefully.
yeah, yeah, yeah. You guys have to protect yourselves. Not you, Brett, and the credit union, but well, obviously you guys do, but the buyers, you buyers that are thinking out there, let's go acquire a business. Sometimes we get so gung ho, like, oh yeah, we're gonna buy this business and we're gonna make all this money. Sometimes our emotions get ahead of us, and we have to really dial it back and say, okay, is this a reality? Can this
Mhm.
actually, is this a viable source to pay the debt? And as we put our new systems in place or whatever it needs to be, and our growth levers, uh, is this going to be successful? You really have to go through that questionnaire on yourself to make that
Yeah.
happen.
Yeah, you do. And also, when you're looking at business, go through that questionnaire on yourself, but also a lender can help you with that too, because they're going to go through the
Yeah.
same questions, right? But Spencer, what I probably could do is provide kind of a framework as to what we look at
Perfect.
for approval.
That's awesome.
So some of you, out there that are listening, you might have heard of the 5 C's of lending, right? And we go through those 5 C's in order to assess a loan and to see if it's something we can get approved, whether it's an acquisition or not. Because some SBA loans are expansion loans, for example. Kind of similar to what you're looking to do, Spencer, right? You're wanting to look at expanding your business,
Hmm.
and maybe that's through acquisition, or maybe it's just opening up a new location.
Mhm.
So it could be, we could look at expansion loans, equipment loans, working capital loans. There's all sorts of types of loans to help
Yeah.
business owners grow. But regardless of the loan, there's kind of 5 key areas we look at. So we look at one that we talked about is the cash flow of the business. Does it have the capacity? That's one of the C's, capacity to pay the loan back, and that 1-to-5 ratio or better is kind of what we're looking at. The second one is character, which is you as the borrower. When it comes to acquisition, we're going to want to know, what is your experience? Do you have transferable experience into this industry you're looking to buy, or better yet, direct industry experience? So your background is really going to matter. Also, your credit history. The SBA does allow loan, to be lent to as low as 650 credit score, which is pretty low and flexible, I would say. But most lenders want to see, better than 700. So if you are looking at buying a business, make sure your credit score and your credit history is in a good place. One other thing I'm going to talk about with character too is we are seeing a little bit of a trend of people looking to buy businesses, and they're kind of looking at, maybe a business that is what's considered passive or semi-passive, and that doesn't really fit within SBA lending. They don't want, and nor do they allow for investment type lending. So if you are buying a business, you're going to need to spell out how you're going to take an active role in that business. Now, it doesn't mean you need to be on the ground running the day-to-day every day, but you still need to take an active role. And so that's another thing to consider on the character side. The next thing we look at is capital. So that's down payment. The SBA allows for a down payment as low as 10% on whatever the purchase price is. Now, of course, if you're looking at a $1 million business, that's still $100,000, right? But I'm not saying it's a small amount. But if you went conventional, you're probably looking more like 40%, right? So relative to a conventional loan, it is a lot less, and hopefully opens up the door for more and more people to buy businesses of that size or bigger. We also look at collateral. Now, this is where you'll see some lenders differ in terms of their position on collateral. So collateral is your assets in the business. And so the stronger, your collateral position is, the more lenders like that, because now they have assets to fall back on is if the loan will go bad. Real estate's the best form of assets, right? But some lenders, especially in talking about acquisition, some lenders are okay financing a large amount of goodwill. I'll give you an example of a business that would have that. Is like a home health and hospice type of operation, right? So, home health and hospice, you have individuals that are going into homes and helping people. There may not be a big office building that is owned or even leased. There's not necessarily a lot of equipment, so the collateral in that business could be quite small. But it could be a very profitable businesses. I've seen home health hospice businesses on sale for $2 million or more with very small collateral positions. Some lenders, they may not like that type of business because it's too much goodwill. Our institution, we're good with that as long as the cash flow is good and the character of the borrower is good and it makes sense. Then we can lend on that. And then the condition of the market is kind of the last thing. So we you as a borrower, especially if you're acquiring a business, you really want to acquire something that has some longevity. And so we want to see what is the condition of the market, not only on a macro basis, but on a micro basis. Some restaurants, for example, may succeed in a certain neighborhood, but they won't succeed in another neighborhood, right? So we want to understand the market condition of where your business is, what's the longevity of it. Is it a dying industry or is it a growing industry? Things like that. So those are kind of the 5 key areas. If we're looking good in all 5 of those areas, you have very high likelihood of getting an approval on your loan.
Well, that's good to know. That's good to know. Um, Question. So, say you're in an industry and you're already operating in that industry as an owner, and you're like, you know what, let's buy another business. Like, say for me, I'm already in the janitorial. I want to buy another janitorial. Are there situations where the down payment can be less since you're already in the industry than 10%, or is it always the 10%?
Yeah, it's a good question. When it comes to acquisitions, it is 10%.
Okay.
There's really not much wiggle room there, and it's about having skin in the game, right? That's what
Yep.
the
Sure.
SBA wants to see, skin in the game. But there is some financing that does allow for 100% financing. So one example of that, and probably the prime one, is that if you, Spencer, if you're leasing your space, or even if you own the space and you're expanding, you want to buy a new location, depending on your collateral position of your business, we could do 100% financing, because if you've got collateral already built into your business, and we look at a debt to worth ratio to determine
Hmm.
that, then you won't need a down payment, and we could do
Yeah.
100% financing on real estate, for example. So there are different nuances depending on the situation. It's depending on what the deal looks like, but in most cases, it's 10%.
Okay. Good to know. And then, if you're buying a business and you're trying to acquire the real estate as part of that business, does that help? Do you get to add longer terms onto your SBA loan?
Yes, you do. So with a standard 7A with no real estate involved, it's usually a 10-year term.
Hmm.
But if there is real estate, then we could potentially go up to 25 years.
Okay.
And that's fully amortized. So there's no balloon payment or anything like that. And that's specifically on a 7A. The other benefit of a 7A too is the prepay penalty is limited. So you're usually looking at 3 years of prepay on that. So you could have literally a 25-year real estate loan that's fully amortized, and prepay is only 3 years, right?
Hmm.
So if you want to pay that off early, or down the road, if you come across another loan that maybe it's a conventional loan at that point that has a better rate, you can refinance it.
Oh, interesting. Okay. Awesome. Well, this is good information. This is what our people need to hear. As we try to grow Idaho and try to, there's such a transfer of value and going on right now with these baby boomers that own businesses.
Mm-hmm.
Many of them have to sell them to have any kind of dignity as they retire. And this is just such a good opportunity for people that are listening to this podcast and who are just thinking about, I should do something different, or I want to expand my business. You're at a amazing time where you can really uh, help someone retire well, and also help yourself grow your business. So,
Yeah, absolutely.
or even get out of the 9 to 5 and step into a business. So,
Yeah, yeah, absolutely. And one other thing I'll make a point on that too is, it's a good idea to speak to a lender if you're looking to sell, right? Because they'll
yep.
be able to run the numbers for you and give you kind of where your business sits in terms of a debt service perspective, right? What I've found that's interesting, because I've got a background in valuing businesses as
Hmm.
well, is there's a pretty high correlation with where your business value is and where your business would qualify for servicing that debt,
Hmm.
right?
Yeah. Yep.
So if those two, if they line up, then you're probably in the right range of the price of your business to sell.
That's right. And that's something I'm glad you brought up, because I was going to bring it up too, because I've seen some crazy valuations out there that you're like, are you kidding me? You want how much
Mhm.
for your business?
Right?
And they don't reverse engineer and think, wow, could this business, service that debt, service that loan that I'm
Mhm.
requesting for as the purchase price. And
Yeah.
a lot of times it's no, because these guys just get a little too crazy with their asking prices. So,
Yeah.
and then when another thing for SBA loans, I'm sure you'll agree with me on this, is if the business you're looking to buy has written everything off, and they're running their personal pharmaceuticals through it, personal everything through it. and their tax returns show little to none as far as income, it's going to be very hard for the SBA to look at that and say, yeah, this is a lendable business.
Yeah, it's such a good point. The ad backs have to be clean and
Mm-hmm.
verifiable. And usually when you're getting into things like, oh, my personal cell phone, or, here's some meals that I personally did, or, I'm paying my car, or what have you, those type of things, they're more difficult to add back.
Mm-hmm.
So you're absolutely right. You want to be really careful about what personal expenses you're running through the business, because it will absolutely just take away from your bottom line, or your EBITDA, or your SDE.
Mm-hmm. And I'm sure you guys are looking at least 3 years back on these businesses to loan on, correct?
Yeah, we like to see 3 years of tax returns and interim financial.
Okay.
Yep.
Yeah. So those of you who are looking to sell, keep that in mind. If you're running it as a I don't want to pay tax game right now, you might want to think, okay, I've got 3 years ahead of me, and let's run it real clean and claim all the income, and so you can have a lendable business, and some other person can come buy it without you having to do seller finance for everything. So
Yeah, absolutely.
well, cool. Brett, I appreciate it, you coming on the show with us today. If someone wanted to get a hold of you for either business valuations, or asking questions about, hey, how can I go about getting a loan for this upcoming acquisition or business expansion, what's the best way to get a hold of you?
Yeah, my phone number is probably the best way to
Okay,
do that. Am I okay to give that on
please.
this? Yeah,
Yeah.
so my phone number is 208-244-4666.
Okay. Perfect. We'll put that in the show notes as well, and people can have that as well as after the show and look in the notes. So. Okay, I appreciate your time, Brad. This been a rewarding episode for people, and even me to listen to this, and to gain those nuggets that we can expand on, and be better of, from as a business owner perspective, or hey, I'm someone who getting out of the 9 to 5 race, and I want to do something different here. So
Yeah, absolutely. It's been my pleasure to be here with you again, Spencer. Good to see you.
yeah, good to see you too. And as always, everyone, always go out there, be happy, be grateful, and find opportunities to serve others. And have a great week. That's it for today's Idaho Business Podcast. Hopefully you learned something new. And if you didn't, I've got a cheat code for you. Go to theidahobusinesspodcast.com, enter your email, and get my 20 golden rules for business. It's packed with my best advice, plus it's free. Subscribe, leave a review, share this with a friend. Until next time, keep hustling, keep laughing, and keep Idaho awesome.